If I sort of think about all the transactions I've been involved in, it really is a function of the people.
Today, my guest is the managing partner of Ethos Capital and my good friend, Brent Stone. Brent, how are you today, buddy?
I'm doing great, Al. Thanks for having me. Absolute pleasure to be on. Yeah, we've known each other for a long time. I was reflecting back when I was sort of thinking about this podcast. I think it's over 15 years now, which is pretty crazy. I think we both look pretty good, all things considered.
Well, you're looking great, buddy. And it's a pleasure to have you. And I'm very excited for this. We met probably, right after the financial crisis. The first thing we did together was the transaction with NSM.
That's right.
Our good friend, Jeff McKernan. That was 2010, I believe.
Yep.
And then we segued into our second transaction, which was the end of 2012 with Comfy Seguros, the folks at Genestar, Ryan Clark, and that group. And obviously that was a hot thing at the time, that non-standard auto. And then we segued into the Hill Group, which was 2015. And then the end of 16 was the investment into Acrisure. And then last but not least, what was High Street. And that was April of 21. And I'm super respectful of what you've meant to me and what you've done for me to help my business really become prevalent in the private equity arena. At least one of the top guys, if not the top guy that I've dealt with in that space, and certainly done the most transactions with. So I thank you very much for that. And this is very much looking forward to this conversation.
Yeah, no, thanks, Al. I mean, look, as I was saying before, like we've known each other a long time. We've worked on a lot of deals together. I've done a lot in this space over the last 15 years, and I think almost all of it was together, right? And I'm really grateful. I mean, you've been incredible for my career. Either somebody you introduced me to, right, or you represented us and buying something or selling something, and so it's just been a great partnership over a really long period of time. So I'm really grateful.
What is the strategy for Ethos? Is it similar to what you've been doing in the same segments, or is there, new segments? I think that people would be curious to hear that.
Yeah. So, Ethos Capital is a firm that, I'm one of the managing partners with a couple of my former colleagues. We take a pretty different approach, which is that, from what I'm sort of used to in traditional private equity, is a very operations focused approach. And so we have 20 plus executives that are part of the firm that are really involved in every aspect of what we do. Folks like Stephen Gold, who is the CMO and one of the primary architects of IBM Watson, guys like Mike DeSuji, who was the CIO of Disney, or a guy like Mike Perlis, who is the CEO of Forbes. And these are executives that are really integrated into everything we do. They're investors in the firm. They're really involved in everything. They're truly partners. And they're cross-functional in the way we look at the world. They're folks that have experience in technology and folks that have experience in, sort of go-to-market, data, finance, like lots of different areas. And we take sort of a matrix approach to things, which is we'll only invest in industries where we have, real expertise in that industry. And then where we, identify some characteristics about a business that we think make it a great business. And then, so that's part of it. And then the second part of it is, can we, through our operational model, really move the needle on the business? And so we won't invest in a business if we think it's just a great business and in an area that we know really well, but we can't move the needle, right? And then if we think we can move the needle on something, but it's not an area where our executive partners have experience, it's also something that we won't spend time on. So Broad Street really, fit extremely well into that. And I'll sort of get into that. One of the things we do when we approach businesses is, we develop a series of what we call acceleration vectors, areas where we think we can impact growth, margin, things like that. And then we push that through what we call our FIT methodology. So feasibility, impact, and timing. And then things that come to the top are the things that we think we can really move the needle, resources that make sense at a time frame that makes sense. And then the last thing I would say about Ethos is most private equity funds are investing, 12 to 15 deals in a fund. We're 4 to 6. And so we're really spending a tremendous amount of time on the deals that we invest in. We feel confident in doing that because we have, we're buying great businesses that are super downside protected. So that's sort of Ethos, right? The sort of high level sort of overview of the firm. I would say, maybe I'll just talk a little bit about Broad Street. and about, I'll talk a little about the transaction first, and then, sort of why we are so attracted to the business. So the business was founded by a guy named Rick Miley. The business had been owned by Ontario teachers for, I think, 12 years, and been super successful. And they were really looking for an experienced partner to bring in to really take the business to the next level. And I think it's probably not obvious or a little non-obvious that the concentric circles of like people who have our level of experience in this sector, and you just talked about, a variety of different deals, right? But that don't already have a platform, is smaller than you might think, right? And so, there are close to 30 and, private equity backed platforms in this space, right? So most investors that you've spent a lot of time or you sort of already have their platform. We really talked to Ontario teachers about was our experience in the space and then our operational model. They were really looking for that partner. And when they started, they weren't necessarily looking to sell co-control of the business, but we felt like that was important. So we sort of discussed with them, us having co-control stake. And then we endeavored to go out and raise the capital to go do that. I think we put together a great group, like a really great group of investors. I would say both deep pocketed investors so that the company has sort of the wherewithal to execute on what they want to execute on. And then also really experienced insurance investors, right? So, we brought in the folks at BCI, who's another Canadian pension. Derek Estes, that runs their FIG program, just great investor. He's sort of my counterpart there. We brought the folks the White Mountains folks in. I know Al, the White Mountains team. Liam at White Mountains knows Mike, the CEO of Broad Street, really well from their Aon days. And then we also brought in, folks like T. Rowe Price, who really blue chip investor, who'd been an investor in the company's debt for a really long time. So I think, a lot of experienced, investors in the boardroom, which I think will really accrue to the company's benefit. And then, a lot of capital. We signed the deal in April. We just closed it in July. We're super excited to get off to the races with the business. For me, I've been an investor in a lot of these different models, and I think this is really a culmination of my career, right? Like what I've seen. The through line through all of it has been the people and the management and their ability to execute on their vision, right? And so just a ton of confidence in this group. The Broad Street model is different, as you said, right? It's they buy what they call core partners, right? And they allow for a certain level of autonomy at the core partner level. And I really think that has self-selected for a group of entrepreneurs that want to continue to run their business and grow their business. I think it self-selects for things like accountability, pride in their business, for long-term thinking. And they really bought some great agencies, right? I think they're agencies that I knew previously, right? And so you would introduce me to some of them, like as usual, like folks like the Connor Strong folks like Westland in Canada, the Sterling team. And these are people that had a lot of choice, as everybody does, right, in this industry of where to sell. And I think they were very deliberate partnering with Broad Street. And I think the Broad Street model really brings a bunch of things to those core partners, right? So they bring obviously technology and data and analytics, sort of technology. And I think, we can get into this more in the industry, but I think in this industry, scale is beginning to matter more and more, right? I think the reason why scale matters is because it takes financial wherewithal and scale to be able to, invest in the types of things that move the needle and from a technology and data perspective. And I think that's a lot of what Broad Street from a corporate perspective brings to those businesses. Obviously access to capital. Broad Street's got, when I looked at the business, 50 consecutive quarters of positive EBITDA growth, right? Really impressive results. And I think what that did was make them really attractive to the capital markets. They have one of the most efficient capital structures in the industry. Allows then our core partners to be able to use that capital to go be able to do tuck under acquisitions and not just grow their business organically, but also to be able to grow inorganically as well. And then I think it's things like broader market access, right? Like making sure that they have access to all the carriers, making sure that they get the best commission rates, making sure that they get, the best policy terms for their clients. And then things like succession planning, right? So I think these are, folks that want to continue to be active and get after it and grow their businesses. But then also, obviously as people age, they need to sort of go through all that stuff. So we're just super excited about the investment in Broad Street. Look, I think a lot of it going forward will be sort of business as usual in terms of executing on the model. But, we're hopeful that, given the access to additional capital and given the, to sort of different voices in the boardroom, that, strategically, I think there's some really interesting places to take the business as well. So, really excited about it. And, it's my first investment in my new firm, and couldn't be any more pleased with what we just did.
No, listen, I know you worked very hard to get that investor group together, and that's a stellar investor group. And listen, you can't not deny the success that Broad Street has. It is a different model. You're betting on holding equity in your sub, and I think the firms that they've attracted have been unbelievable, and they had a vision. They stuck to their strategy, which was find a big platform in a geographic area, and that becomes your hub. You're always holding equity in that geographical hub, and it's very different. There's a good segue in for us to talk about the marketplace and the interest rates, and how do you see the market? How do you see it for Broad Street? How do you see your interest in insurance brokerage? I'm curious to get your perspective.
I think there are very few businesses that have the sort of financial characteristics of insurance brokerage better fits for private equity, right? So, I mean, it's a compulsory product. It's highly, highly recurring. Broad Street's case, we hired McKinsey to do work on the deal, and they said it was the highest retention they'd ever seen. But I mean, just the industry in general, the retention's fantastic, right? So really highly recurring business, right? Private equity loves. Very high free cash flow business, right? So again, private equity loves those sorts of businesses. There's an ability, very tried and true issuers in the financial markets from a debt perspective, right? Very efficient capital structures for lots of these players. And then there's tons of levers for growth, right? This continues to be a surprisingly fragmented industry, even after all the consolidation that's happened, right? Organic growth's been strong in these platforms, frankly, through hard markets, through soft markets, right? Through recessions, right? I mean, you go back and look at the last 20 or so years, and it's just steady Eddie through all of that, right? And so, those are the sorts of business private equity love, right? You can go to sleep at night and not be worried that something bad's going to happen to your business, right? And so I don't see any waning. What I would say is that, there are close to 30 private equity-backed platforms in the space, right? And not all of them are going to be public companies, right? And so I personally think there's sort of a consolidation of the consolidators that's coming in this space, right? I think you're seeing some of the things you just mentioned. I think that's the beginnings of it, right? You're starting to see it. I think what you're going to see is that there will be a number of public companies companies that go public in the sector, right? And I don't want to necessarily, say who I think those will be, but I think that, there's a bunch of great candidates for, that could be public companies. As we did our work on Broad Street, we talked to, all the research analysts and the investment banks. And if you talk to like the Goldmans and Morgan Stanleys of the world, I think what they would tell you is that insurance brokerage is one of the most underweight sectors from a financial services perspective, right? Be public versus private, and they would tell you room for another 5, 6, 7 public companies, right? In this space. Going public isn't a exit necessarily on its face, right? It's just another financing mechanism. You need to perform well as a public company, right? And so, there's a lot of work to do for these businesses before they get to that stage. And I think a lot of them are going through that process now, right?
Yes.
Right.
Some.
Yeah, some, right? I think you'll see a number of folks go public over the next 2, 3, 4 years. I think so. That's that. And then, look, I think you'll see a lot. I think you're also going to see a lot of consolidation amongst the private equity-backed players, right? I personally, or I wouldn't maybe investment think Broad Street's really well set up to be one of the consolidators. I don't really, as an investor, have a preconceived notion of what that means, whether that's through in a private context, a public context. We're gonna endeavor to find the highest value, outcome ultimately, right? One of the things that I've found has always been an impediment to consolidation amongst sort of the private equity-backed players, or even some of the big sort of privately owned players, is cultural, right? Like, people don't, they have a lot of pride in their business. They have a lot that they've built. A lot of these folks that are running these businesses started them, right? Or at least were involved really, really early. They're super proud of their organizations, their brands, right? And it's hard to, to put businesses together. But, a lot of them are owned by private equity, right? And I think people are going to be looking for liquidity. And so I personally think a lot of that's going to happen.
Yeah, listen, I echo almost everything you said. I think there's a couple paths, and the one word you haven't used yet that all, the insurance brokers, and that's why, because you're a PE guy, and that doesn't mean you don't have the same opinion, is optionality. Everybody's using the word optionality now because, nobody wants to commit what their next event's going to be, but you hit it right on the head. I mean, you have to prepare. If you're thinking you want to be a public company, you have to prepare for several years in order to get ready to do that. And that's really, less M&A, more focused on integration and organic growth. Because remember, when Greg and Acrisure really came in, and I give Greg a lot of the credit, although, look, Alliant was doing it first. They were the poster child, great company. Assured, we know where they are now. But then Greg really got the attention of these entrepreneurs, which is really what the industry is, entrepreneurs and family businesses. And they saw that they could be partners. So this decentralized model was the hot player back then, 12 years ago. And now it's non-existent. You can't survive that way. You have to be growing, and you're growing, they all know you're growing through acquisition. You have to be growing organically, and it's got to be working, and you have to integrate it. So I think the big thing, that I see is that, in order to have that optionality, you have to be ready to do everything. If you prepare to go public, you got to be ready to be able to go public. If you don't end up going public, you have to be ready to see what your other options are. And what we're finding is, and I think the interest rates have something to do with it, Brent, and that could change, is a little bit of a cycle here now that, because of the interest rates, that to stay private, which I think some people thought they were going to be able to do. And you can't, when you get big, stay private with just one investor anymore, right? That's only goes to a certain level. It probably is even the levels coming down. You have to have multiple investors. And look, we've seen fund-to-fund deals because people want to stay involved in the asset because it's too hard to find good assets. It really is. When I get more private equity calls and more private equity emails than I could have, dozens a week. And I evaluate them all, and I'm respectful to them all, but they all want to know if I have the next platform. And what I try to say to them is not the platform, it's really the leadership. You got to find a person that has got the what to go out there and be able to take outside capital, drink from a fire hose, not a garden hose, and be able to go out there and build the next national broker. It's not easy. The guys that have done it, I give them great credit, and they're out there slumming it. And, the PE guys, it's a double-edged sword, right, for you guys. You want them to do, very, very, you want to be strong in M&A. You want to be strong in all facets, right? You want them to be very disciplined in with their buying and so on and so forth. But if they don't have a pipeline going at all times and they don't have things happening, you're looking at them and they say, what are you doing? So they're constantly under pressure to continue to perform. And like you said, insurance brokerage, high margin, residual, most of the lines, you need the product by law. It's recession proof, right? It's the darling of guys like you. You've done so well, and you're smart to invest in this sector. And we've done so well together. And me too. I'm lucky. I mean, reason I'm involved in insurance is because when I didn't get drafted to play baseball, I played Division I baseball. I thought I was going to get drafted, led my team in hitting, had a great year. They told me I was too small at 5'8". There was no Altuves at the time. I didn't know what to do. So I went to a headhunter. He said, get a haircut, buy a suit, and you put me in Liberty Mutual. And that's how I started. And in the year and a half after Liberty Mutual, I hated the whole approach. And it was direct writer. Not that Liberty's not a great company. There's nothing against Liberty, but it wasn't for me. I went back to the headhunter. He says, why don't you do this? So I started it from the executive search side, not knowing anyone, just knowing direct writer, and built all these brokers up. Okay. But, had no idea at the time what I was doing or what I was getting into, okay, until I really found my groove. And that was really helping these companies build through growth and profitability. That was always my theme. So, I've kind of had the eye on this for a long time on kind of what's been going on, even as a young man when I started this. My mindset was exactly what everybody needs to do. It's growth, it's profitability. But Brent, I think the big thing now, okay, is integration. And look, I fell into this insurance thing that way. And I think it's an industry that both you and I have really, got our arms around and have done extremely well. I don't think there's another industry. I think it's the best kept secret. It's unfortunate because it's not sexy, right? It's unfortunate that a lot of young people don't come into it, but it's the best kept secret of an industry in the country.
Yeah, I mean, I could possibly agree more. I'll tell you one story, Al, that made me think up as you were talking, which is, when we did the NSM transaction originally, sort of where you started, where we met each other, right?
Right.
They actually, they wrote a Harvard Business School case study about that deal.
I
And
remember that.
I actually teach it every year at Harvard. And Jeff McKernan comes with me sometimes and teaches it. It's pretty wild to see Jeff and I at
Yeah.
Harvard. I don't know.
Oh, I'd
It's
love to see that. Take a
crazy.
video next time. Okay.
I will. I will. But what you made me think of was one of the things I say to the students every year, and it's because the professor, the Sharfstein, the professor at Harvard, told me when we wrote the case that I think it's one of the only cases, or at least at the time, it was one of the only cases on the insurance industry at HBS. I think there are a couple more now, but just
Okay.
given the size of the industry and how important it is to the economy, it's pretty wild that there was one case on the insurance industry at Harvard Business School, right? And so one of the things I say to the students when I teach every year or explain the case is just what you said, right? Like, hey, like think about going into insurance, right?
Yeah.
It's an area that I think we need talent, right? I think that it's a fantastic industry. It's recurring. It's it's if you're an entrepreneur, you can do really really well, right? So I'm always encouraging people to come into this industry. I just think it's not as cool maybe as some other ones. That to your point, right? But um, I just think I couldn't think of a better industry in terms of your ability to really do well if you're hardworking and have a lot of talent.
100%, because someone said to me not too long ago, if you're lazy, you can do really well in insurance brokerage because of the residuals, right? They're the good and the bad, right? You keep them, it's great. You don't grow them, and something happens, shame on you. But you can be really good in this business, doing a lazy job. If you have any motivation at all, you do an outstanding job. You do a great job, and that's what a lot of people have done. But there's a lot of brokers out there that are 80, 100 years old, generation after generation after generation, that make a great living. They're over $1 million of revenue for 80 years, from great grandpa to Sonny Jr. And it just keeps going down the tight. And there's many, many of them, but they make great livings. They keep their local customers because most of them are local agencies. They're the local insurance guy. He's the hardware guy. He's the banker. I mean, so it's an unbelievable industry that's not sexy. And that's why young people don't come into it. But I got to tell you, since I've been doing these podcasts, more of these guys, young guys, have reached out to me that have seen these podcasts, whether on LinkedIn or whatnot now, inquiring about what's going on and about
Yeah,
the space. And it's been
yeah,
unbelievable. It's been like, wow, like out of the woodwork, because these folks don't really know. And several of them, I've been able over the years to get jobs at some of the major brokers, and they become some of the top producers in some of these firms overnight. And they didn't know this residual factor is the greatest thing ever.
The other thing it makes me think about is just, and I know I talked about this a little bit, but if I sort of think about all the transactions I've been involved in, it really is a function of the people, as we were talking about before, right? And so I think about a bunch of the deals, right? Like I think about help and bringing Ricky Spiro,
Right.
who Ricky was an investment banker in the space, and then he was CFO at Chubb. And, I remember recruiting Ricky to come, to the business. And I think business really took off when, Ricky joined. And I think, again, it's like, this is not a super complicated business, right? But, the sort of rigor that you need to approach it with and the professionalism that, if you really get the right person to approach it with can really make all the difference. And frankly, there's ups and downs, right? In any sort of business, and having the right person at the helm, I think, really makes all the difference. As I sort of reflect on Hill for a second, one of the things that just like really stood out to me about that deal was, we had a tragedy. I don't know if you remember that in the middle of the Hill deal where stories where, yeah, yeah, Brad and we had a number of executives there died in a plane crash, right? And that was tough. Like I've never had to deal with anything like that in my career, right? I remember, Nate and I, attending funerals, right? Which just I had never really had to experience anything like that. And you know, having somebody like, I just remember having somebody like Ricky at the helm, and I was always just so impressed, sort of the grace and, how he approached that situation and how he like, sort of guided the company through that period of time. And ultimately, we ended up with a great outcome for lots of different people, for the investors, for, the agency owners, but, also for the estates of those folks as well. Right. And so, I just, anyway, I don't know why I thought of that necessarily, but it was, it's really always goes back to the people.
Yeah, it's all about the people. I tell all my sellers, people by people, not businesses. Usually, if it's a good person, there's a pretty good business behind it. I know it's important to private equity. I know that private equity is always going to look out for the private equity first, even before the company, as much as everyone says, oh, well, we want to do what's right for the company. But, they'll do with the right thing. The one thing they don't get involved is with the people, other than the leadership, right? So all these other people you're bringing in, the one problem I have a lot of times is they sit behind, okay, these deals, never meet the people, and they make judgments on spreadsheets and sims, right? So, sometimes that frustrates me because I want to run back to them and say, hey, you got to let this guy do this deal. This is a good person, and so on and so forth. But the thing that private equity's brought to us, other than huge success, and obviously us investing in now 7 investments in the space after the most recent the transaction we did for Alchemy, I've become really close with guys like yourself who don't only invest in insurance brokerage and have kind of blown in my ear and said, hey, look, Al, there's other industries out there that are fragmented that kind of look like insurance brokerage. That's what led us to get into the public adjuster market, because that's a wide open canvas. There's not 30. I think there's more than 30, Brent, private equity backed brokers out there. Okay. It's not crowded. We do not want to get involved in anything just to participate. What I like to do is dominate. It's like we have an insurance brokerage. We've been a dominant player. And bottom line here is that's a wide open canvas. It's kind of insurance brokerage related a little bit with the claims and all that stuff. But, what private equity's done for me is kind of help identify other industries, just like the thing we've talked about. And by the way, we've engaged that group, on the data side, that, I can come to you and say, Brent, give me your opinion on this. Okay. What do you think of this industry? What do you think the opportunities are? What do you know? Do you have anything that would click with this? And that takes up my business into a whole nother or different industries, which is part of what we're trying to do to build this company beyond just insurance brokerage, which I really feel we're in a phenomenal position there, and it always will be, to be leaders and market makers in that space. But we want to be the same in other industries. And what guys like you have been able to do is open my eyes and my partner's eyes, and my partner, Mike, has a huge interest in expanding to other industries. That's part of what he does to the firm. And it's been great. So, there's a lot that's come out of this for me. Okay. It's not just great relationship and friendships like we have, but, exposed me to other things and really helped me be a guy that can evaluate any kind of business. Okay. I mean, I feel like a PE combination of a PE guy, an insurance broker, and everything in one, an attorney, an accountant. I feel like, 5-tool player here. Because of all the experience I've had, and folks like you have not only helped me in the insurance brokerage space and helped me be an investor and everything else, and be part of these things, but you've helped me open my eyes to other sectors, and I appreciate that.
Yeah, no, of course, Al. I mean, look, I think you totally have dominated the brokerage space, right? I think the data, it's pretty clear. I mean, you guys have been phenomenally successful. In my mind, you've taken sort of a different approach. Do we necessarily have to run a big, huge process in order to find the right partner? Not necessarily, right? Like if you're sophisticated in the sector, you have a good sense of what something's going to trade for, right? And so at least a lot of transactions we've done together, they were pretty proprietary, right? Either one party or two party, right? And, and I think it worked out really well. And I have a ton of respect for that, right? Because I think there's a lot of people that sort of tell their clients what they want to hear. They sort of, they know that, the typical thing is to run an auction process, for example, right? And so they tell their clients that, right? Because they think that that's going to resonate with them. And I think what I found about you and Sica Fletcher is that, what I found is like you just want the best outcome, right? And so it's like, how do I get to the best outcome with the least amount of disruption for your client? And I think that's very differentiated. And I don't see that a lot. And so I think if you apply that model to other spaces, you're going to be incredibly successful. I know we've looked at, lots of other sorts of things together, but I think if you're, you always tell me like you still got your fastball, right? Yeah, I think there's a lot of runway left. At least, definitely for me, I think I'd love to partner with you on lots of other stuff as well.
Oh, no doubt. I want to see the wealth and the success that I've created for myself and my partners and others, including yourself. I want to see that for some of my younger people that are involved in this, and that's why I'm excited about it. But yes, I think the success to our model is the way we run the process, the way we manage the people, the way we manage the process. I think it's key how you manage the people. I think a lot of people go to business school and they learn right away that, the customer is always right. Well, they're not always right. Okay. Our clients, I tell them, if you're not going to listen to me, don't hire me, because why would you hire me and not listen to me? Okay. It doesn't make sense, because we have the track record that could choke a horse. We have the network best in the country, and we have the data points that's, ridiculous. So, if you want your business to be evaluated, and what I tell people, Brent, is you're not making a decision to sell your business when you hire us. You're making a decision to have the best advisor in the country help you figure out where your asset sits in the market and all your options. And that's the key to the whole thing. We're not a sell side. We're not a buy side. We are top advisors first, and we are certainly market makers in the insurance brokerage space. And that's why any sector I get into, we want to be market makers in that space. That's the differentiator. But managing the people and the process can translate to any industry.
One of the things I've been really impressed by, is, your ability to sort of say to your clients, like, who you pick as your partner is incredibly important, right? And, I listened to, Kevin, who was on previously, talking about, as a private equity investor, that's, got a lot of experience in this space, like, you and, folks like Kevin or me or you, like, we can pretty quickly come to an assessment of, like, for example, like, whether or not you should do a deal, right? Like, it's not that complicated, right? And I think where people get into trouble in this space is, analysis paralysis, right? And, just, thinking that they're smarter, right? And sort of, and then not doing things, right? And so I think a lot of the success that I've had, I think Kevin, said it as well, is just sort of getting out of people's way too, right? And so I think that's a function of experience and confidence, right? And partnering with the right people, right? And if you do that, like, if you know your sector well, you partner with the right management team and the right people, yeah, you want to add value and all that sort of thing, but part of it is just getting out of their way and letting them do what they do. And I think, you've always preached that. I think I learned a lot of that from you, frankly. And I think that, I've just always been impressed that you sort of give that right advice to those clients, because you can pick the wrong party to partner with.
Well, it comes down to back to the people, right? So I take pride in reading the room in about 5 minutes. I got good instincts that I can read people very quickly. And when you have that, because I almost put certain people in certain categories, right? After all these years, you can categorize people. Oh, this person is one of them. That person is one of these. Who's going to, really be engaged, or who's going to give you trouble. And you got to constantly be qualifying. I qualify people like yourself every day that I know for 15, 20 years. You got to constantly qualify. And when you get your arms around it, you got to control it, especially as a middleman like us. If you don't control it, you're always the victim of the finger pointing. If something goes wrong, and believe me, after 37 years of doing this, you still have that stuff happen. We just had something recently happen like that too, where, we had someone that didn't really want to listen, and, they thought they knew better. And, at the end of the day, when we when everything went bad, they pointed the finger, and we're an easy target. But I got thick skin, right? And that doesn't bother me. But you got to qualify, you got to control, and you got to execute, Brent. And that's the biggest thing. Those three words I live by. And execute is what really is the end game. And what I always say to people is, what's the most important thing in business? And I never get the right answer. Okay. I'm sure you're not going to give it to me either. Okay. But the most important thing in business is getting paid. Okay. When you get paid, you did all three. Okay. You qualified, you controlled it, you executed, and that's the fruits of it. And listen, we've had many, many paydays, been super successful there. I never worry about that. The wind's at my back. I just want to do the right thing for people on both sides of the ball. And you got to be conscious of representing the deal getting done, not who do you represent. It's never can be a David or Goliath. You got to bring people together. It's got to work for everybody, and that's been the philosophy. I can't, thank you enough and express enough of what you've done for me and our business. My partners, have the same, gratitude towards you. You're an awesome friend. You're excellent at what you do, top of the table. I'm so happy for you in your new venture. We are going to do a lot more. You're one of the guys that, I ring up on anything, including the stuff outside of insurance brokerage, which we hope to continue to expand upon. But Brent, this has been awesome. I've really, really enjoyed it. I think I've covered everything that I wanted to cover today. I hope if there's anything that you still want to cover, please, let's dive in. But, if you're good, I'm good. And this has been outstanding. You've done a great job, and I'm really appreciative of having you today.
Yeah, no, thanks so much for having me out. It's been a blast. It's been fun to reminisce about some stuff. And I agree. There's a lot more to do together, and I'm looking forward to the future.
All opinions expressed by the hosts and guests are their own and are not necessarily those of Sica Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sica Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sica Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others. For more information about your unique situation, please contact Sica Fletcher or visit us at www.sicafletcher.com.